Canadian investors are using ZSP over any other ETF for exposure to the S&P 500 index. Institutional investors, investment advisors, and DIY investors have all been trusting ZSP with their investment dollars since the fall of 2012. ETFs provide instant access to a portfolio of stocks to an investor in a single, cost-efficient trade. For an investor to own the entire index would require institutional-level trading systems and expertise. To accomplish this, an investor would have to buy 500 stocks at a time, and then as the market moves, it would constantly have to rebalance those 500 stocks several times a year. ZSP simplifies this process by aiming to provide instant access to the 500 stocks in the index in a very easy and low-cost way. Before we get started, I just want to remind everyone that this information discussed today is not intended to be or construed as investment advice. Please consult a professional advisor before putting a Loonie in any of these financial markets.
The dirty secret is that no one's ever going to get paid back.
People have the shortest memories when it comes to investment.
We just got to get Keith into Bitcoin.
Hey, there's a bubble.
Welcome back to Loonie Hour, episode 161. As always, joined by the three amigos, Boomer, Keith Dicker. What's going on?
Well, I'm so excited because our guest today is from the University of Waterloo. So I wore my University of Waterloo t-shirt today. So I hope he'll like that and appreciate it. But otherwise, huge week with markets and political events from everywhere, not just the US. And Rich is going to talk about another country that has had some big movements going on. But hey, it's a lot of excitement over here as usual. How about you, Rich? What do you have going on?
Walls
Oh,
growing.
nothing. Walls growing. I got a light, so Steve should be happy about that. Otherwise, the Canadians suck, which is very sad. We were not going to go 82-0 this year, to my dismay. And otherwise, nothing. It's freaking beautiful weather out for November, and I'm ready to talk about all things oil and gas.
It's a busy episode here. We got oil and gas in Canada. Some production snafus here in Canada. We had the U.S. elections, of course. The results. Drum roll. There you go. We'll get into that, but and then I don't know, Rich, you got some other stuff you want to talk about. We got a Fed meeting as of recording. We record on Thursdays. The Fed is meeting today, post-election. So we're going to kind of get into all of that today. But first and foremost, we have a very, very special guest coming on the show today. This is in regards to, was it 2 weeks ago, where the Feds announced their big changes to immigration, population growth. So we figured, you know what, we're a couple of weeks late, but we got Professor Mikal Skuterud. Anyways, he's a big name.
Don't ask me to pronounce it.
He's a big name on Twitter. He's been all over this. He's a professor of economics at the University of Waterloo, Keith. He's completed his PhD at McMaster University and has had a short stint with Stats Canada. His research interests lie in the field of labor economics, especially in the areas of immigration policy and labor market regulations that affect the hours that people work. So, he's all over Twitter. He's all over mainstream media. He's in the ears of policymakers of all political stripes. So he's a guy that is heavily relied upon to provide his insights and analysis into the immigration side and the pros and cons of population growth. So we're going to get into that today. So why don't we just jump to that interview now? Without further ado, let's cut to the interview with Mikal. Mikal, welcome to the Loonie Hour.
Hey, thanks for having me, guys.
Thanks for joining the show. We've been big followers of your work there on Twitter. You're at the University of Waterloo today, but I think you're testifying in Parliament here coming up, to my knowledge. So I know that you're involved in that space. So you're a voice that is sought after, and so we appreciate you taking the time to come on the Loonie Hour here. You've been tracking really the immigration side, population growth side. Can you maybe share some of your views over the last several years, just maybe what you've noticed or have flagged?
So, I come to this literature through my academic research. So, this is something I've been working on for 2 decades. It's broadly the field we call the economics of immigration. There's a group of people, not very large group, but there's a group of people that work in this area in Canada. And for many years, my research was just focused on publishing in these kind of peer-reviewed academic journals that maybe on average 5 people would read these articles. But, 2015, we had a government that was elected that had some very ambitious plans on the immigration front. And trying to sell Canadians on those plans was very much tied around this narrative that this was going to be really good for economic growth. It even went as far as to suggest that it was absolutely necessary that there be this very significant increase in immigration. And, I'm an immigrant. I'm somebody who tends to be very pro-immigration. And cares a lot about Canada's exceptional, public support for immigration and long-standing public support. So when I heard this narrative, I kind of felt like, yeah, it'd be really nice if this is true, if this kind of rhetoric is true, very hyperbolic kind of rhetoric about all the benefits. We're all going to benefit from this significant increase in immigration. If that was true, I'd be the first one on board. But you kind of in this awkward position that you kind of understand how economies work. And you realize this is not true. It's not that simple. And so that's I think when I started to become a bit more vocal and engaged in the public forum, just to say, wait a minute, this is not quite right. And of course you get blown off quite quickly when you pour cold water on people's dreams and what they would like to be true.
I guess, so it sounds like you were really early, but I guess what were your concerns? Because I'm thinking about it and I'm saying, okay, well, hold on a minute. If I was the federal government and, the liberal government just coming into power in 2015, why would I create policy that wasn't going to benefit the economy or benefit Canada in general? So I guess what was your initial concerns around what they were proposing?
So, I was contacted by the first immigration minister in the Liberal government. That was John McCallum, soon after they were elected. And I was given a series of 6 questions, a small group of us. I was part of a small group. We met with Minister McCallum and we wrote up a report, a 32-page report, answering those questions. So, the writing was on the wall just in those questions on where they were planning on going with this. I'm quite sure that
some of those. Can you share some of those?
Well,
questions?
so what, basically, I think that the idea, Steve, is that, when we say immigration is good for the economy, we have to be really careful what we mean by that. And so this is where metrics become really important. What does good for the economy mean? The reality is, of course, that pretty much all economic policies have distributional effects. There are winners and losers. I mean, if you could think up of economic policies where everybody wins, you're going to be the leader of the country. You will get elected for sure. So the whole point is that economic policies have really difficult distributional effects, and immigration is no different. And so when they say that increasing immigration is good for the economy, what they were thinking about when you read when you kind of get more into the reports, is that it would grow GDP. And that's usually what not economists, not academic economists, but regular people's not the right way, but non-economists, they think that, growing the overall size of the economy, that's how we measure economic growth. And that's usually what gets reported. But for economists, economic growth is growth in GDP per capita. And so that's, I think, the crux of where the disconnect was between what the academics are. They were saying, well, this isn't quite right. Trying to grow GDP per capita by just adding more people to a population, that doesn't necessarily could work if you do it in a particular way, but it may not work. I think that was the crux of it, Steve.
Do you remember what the initial proposal was in 2015 when they came to you and said, hey, this is what we're thinking of doing? I think they had some initial targets, but I don't know.
Yeah. Well, so they always have 3-year targets. And so soon after getting elected, of course, then Minister McCallum had its first 3-year, set of targets. And there you saw the ramping up. But I think more importantly, it was a very important part of Bill Morneau's, he struck up an advisory council on economic growth in 2016. You can go online and see the membership of that council. It was comprised, with one exception, entirely of people working in the finance world and as management consultants. With one exception, there was an academic economist, Chris Reagan at McGill University, and this was led by Dominic Barton. And one of the members was a man named Mark Wiseman. These guys are the two guys who created the Century Initiative, which I expect many of your listeners know about. So
it's like 100 million population growth of 100 million by what,
2100.
2100, yeah.
So that's that's very ambitious. I mean, most academic economists, when we heard that goal in 2015-16, just kind of shook our heads and said, "Whoa, this is a big deal."
But it has such a nice ring to it, though. 100, 100. It's the same number. It has to
that's
work.
It really, I try to avoid being hyperbolic, but it really, when you look at it, it was a propaganda organization. It was a lot of money being poured into, changing the hearts and minds of Canadians and getting them on board this idea. And so anyways, those two guys were very much part of that. They led the Bill Morneau's Economic Advisory Council. And so those immigration goals became a part of a key pillar of the LPC economic growth agenda. And so the economists were very quickly shut out because, nobody wants cold water poured on them.
Party pooper.
Right.
So Steve, can I jump in there? So I have a very important question. I think you taught my former boss, Aidan Garib, and I want to know if he was a good student or not.
I would have to go back to my files. So I teach every fall. I teach about 650
Clearly
students,
didn't stand out.
Yes.
Okay, no, I'm just teasing. So I've made the case to our listeners and to Steve and Keith that productivity is not everything. It's the only thing. And maybe because maybe I'm sort of an amateur economist myself, I think of the effects that massive immigration of let's say maybe less skilled people has on what the effect is on productivity, in the sense that we talk about different substitution effects with respect to if companies are going to invest in capex or labor, and how those two sort of interplay with respect to immigration and low skilled laborers and stuff like that. Can you just sort of do a better job than I did explaining that sort of phenomenon?
That was pretty good, Richard. I'm not sure I can, but the way I teach this in Econ 101 is just to kind of think about there's a notion out there, and it's very much part of that Century Initiative kind of rhetoric, that there's a kind of the jobs that need to be done in an economy are fixed. They sort of get handed down to us from heaven. There's a certain number of these types, X types of workers and Y types of workers and Z types. And the job of policymakers is just to make sure all these job slots get filled, right? And if there are vacancies and they're not getting filled, then we've got a major problem. It's like, you think about, a machine where some of the cogs are broken, then the mentality is the whole machine's going to fall apart. But that reflects a complete misunderstanding of how economies work. The best way to think about this, just look across countries. If some of your listeners have traveled around the world, they will realize very quickly that the percentage of the jobs in an economy that are done by low-skilled workers varies dramatically across countries. So, I spend more time than I would like to in Florida because my in-laws live there. If you go around this, Miami area, you'll see all kinds of jobs being done by human beings there that are generally not done in Canada. And if you go to where my father's family's from, Norway, where the cost of low-skilled labor through minimum wages is just exorbitant, there's nobody doing these jobs. Jobs like taking tickets or sweeping floors with a broom, or all these kinds of very manual kinds of repetitive task jobs are just not done by human beings. And so the way this is very much related to productivity, is that productivity in large part is determined by the amount of technology that every one of us uses to produce with, right? That's how we make most Canadians think being more productive means working harder, but that's not true. That's not what economists think, right? Economists think it means working smarter, and a big part of working smarter is using more technology that complements your tasks.
So just to add on that, and I'll pass it over to Keith, but so I've made the case that we're in basically, I wouldn't call it a recession because that's the wrong word, but a dearth of capex. I mean, real capex or private sector capex is basically at a 12-year low. The only part of that is intellectual property products, and that's rising. And I've made the case that it's because basically we keep on suppressing wages, and so companies basically don't feel the need to invest in capital. I know that's very simplistic to say, but how do you? I mean, is that fair? Is that? I mean, I've heard you speak about that sort of on the on TV. I mean, is that something that policymakers think about? Sort of in basically discouraging businesses from investing via the labor market.
I don't know how much policymakers think about it. I mean, perhaps they're thinking about it more now than they have in the past. I definitely don't think that, for sure, prior to 2015, if you look at the investment data, capital investment data in Canada, whether it's machinery and equipment, whether it's it's public infrastructure, whether it's, as you said, intellectual property, there wasn't, I mean, the investment per worker in Canada was lackluster even when the Liberal government, which is why the economists kind of said, well, how do you think the solution to all of this is just to add more people? That just dilutes the capital stock. Now there's even less capital per worker. So I think that for economists, we recognize there's probably, undoubtedly, there's something more to it than just immigration. There's no question. Canada, there's some deeper rooted problems. Just you guys know the housing market way better than I do. But there's very little doubt in my mind that a huge part of the difficulty in the housing market is just regulation, right? Zoning bylaws that make it really what in Econ 101 we say is a very inelastic supply, right? Price inelastic supply. If you combine inelastic price elasticities with increases in demand, there's only one thing that's going to happen: the price is going to get driven up, right? That's just inevitable. And so I don't think it's just immigration, but I certainly think it hasn't contributed. And that's not just, wishy-washy, what we would, think might be true. There is hard evidence on this. So there's some really interesting research from the U.S. where you get almost like an experiment. Some cities get bigger inflows of immigrants over time than other cities just by random chance. There's ways to identify that. And what you see is it does have an impact on the amount of capital investment in these cities that are being, where there are larger inflows of lower skilled workers. Because why would you invest in capital if you can, as my friend Joel says, if you make home support workers cheap enough that they can come to my house and clean my clothes, I'm going to throw out my washing machine.
Cool. Thank you very much.
Keith.
So let's
go ahead.
Yeah. So first of all, Mikal, thank you for coming today. And everyone who's watching, see, I have my University of Waterloo t-shirt on. So I wore this for you today, for you to see it. In keeping with, I do have a question about my tuition bill. It's a very itemized invoice. Have you ever seen them?
No. Well, yeah, I have, because I have a son in university.
Okay, so if anyone who has not seen these across the country, there's literally about 45 line items. And I'm pretty sure I'm contributing $2.75 to the Economics Social Club every semester. So I hope you're enjoying that money this season.
They do good work, actually. So there's a little committee there and a president, and they have events where they invite people in.
You know what? I have a lot of love already for university, and next time I come up there probably twice a year, so we'll get together in person. Absolutely. I have a question for you next. I think everyone now is very well aware of how the population story has arrived to where we are right now. We know now how we arrived to this situation when the population grew too quickly. And all of a sudden, we have a very dramatic U-turn or 180 in policy. Share with us your thoughts on how this may play out with the economy and different parts of it, specifically whether it's housing or healthcare, education. Because if you're going 100 miles, 100 kilometers an hour down the road, and obviously you slam the brakes on and do the Fred Flintstone, something else unexpectedly is going to happen, and that's what we're trying to figure out. So what are your thoughts on that?
So I guess my main thought is, let's go back to what I said before, that when we try to juice an economy with just a lot more labor very quickly, increase the growth rate of the population, there's going to be an effect on kind of distributional effects, more than there will be an effect on the average. Although we're seeing, by average, I mean GDP per capita. That has been falling in Canada. Part of that is due to immigration, undoubtedly. So we are actually seeing this decline on the average, but more generally, it's not going to affect the average as much as having these distributional effects. There's winners and losers, and it's pretty easy to understand who the winners and losers are. And because your listeners understand economics and the basics of it, this is easy to understand that, the people who are going to win are always the people who are on the opposite side of the market from the immigrants. So where immigrants are on the demand side, you want to be on the supply side. Where immigrants are buying stuff like mortgages, you want to be selling mortgages. Or where the immigrants are on the supply side, like in labor markets where they're selling their labor, you want to be on the buyer's side, the demand side. You want to be hiring, because that's the way the prices of them are going to be going down because they're plentiful, they're in surplus. And so that's basically, now, the people who suffer, who struggle, who feel the growing pains of population growth are the people on the same side. If you're living in an immigrant community and you're competing with jobs or for housing with these newcomers, you're going to feel that pain. Now, the answer to your question is basically the people who are going to now feel the pain when we go in the other direction is just the opposite. So the people who were benefiting from that huge population growth are now going to struggle, right? So the landlords that are trying to rent out their houses, the banks who are selling their mortgages, or most importantly, the businesses that rely on immigrant labor to turn profits, they're going to feel the pain. Whereas people who were struggling before are going to feel some. We've already seen rents going down a little bit in some of these university towns, so they're going to feel a little.
They're coming down in the main metro areas as well. Vancouver, Toronto, in the main cities, we're seeing rents declining, and this is in advance of what the federal government has told us. Again, I don't know, their execution is up for debate, but they're suggesting that the population will actually contract over the next 2 years by 0.2%. So let's just call it zero growth. I guess my question for you is, how realistic do you think that is? Number one, because number two, I think that involves, 900,000 non-permanent residents leaving the country, like basically being asked to leave. And so I kind of scratching my head is like, well, how many of these people with very little resources are actually going to leave? They might do they claim asylum? Do they just stay here illegally? I'm kind of curious what your thoughts are on that, on both those.
I'm sort of I'm not good at forecasting things. That's generally not what I do, and so I'm tempted to punt on this. And the way I'll respond is just to say that there are two big caveats here. One is, of course, that the party whose plan this is may not be in power for much longer. So there's that. Yeah. Who knows what the new government would do? The second thing, which is more interesting to me as an economist and somebody who's focused very much on data, and it touches on what you just talked about, Steve, is that we actually have some significant problems on how we measure population. There is a fuzziness to this.
Interesting.
Somebody who comes on a tourist visa is not counted as part of our population, but somebody who comes on some other kind of visa is, like some work permit or a spousal work. And so there is a point where this gets a bit fuzzy. And so what happens is, in a country like Australia, every time somebody leaves the country, if you visited Australia, you'll know that when you leave, you have to fill out a form. And that form you have to write down. Where are you going? When are you planning on coming back? Why are you leaving? And everybody fills that out. Australians have to fill that out too when they leave Australia. We have nothing like that in Canada. There is no exit data. We have no reliable exit. Immigration, the Immigration Department and Statistics Canada does not use any kind of exit data when they estimate the population. So now you have a huge 7% of the population, Steve, are people with no permanent status in Canada. The government expects huge proportions of these folks to leave. We know that many of them were enticed here with carrots from post-secondary institutions and also employers selling, LMIAs and so on. They were enticed here kind of under this expectation that they would put them on a path, that temporary status would put them on a pathway to PR status. That's what they were paying for. So it's reasonable to believe that large numbers are just not willing to, or maybe not even able to. I teach international students. They've made huge sacrifices and investments to get to Canada. Just to pick up and go home is tough. Now, the problem is when they then overstay their visas, Statistics Canada is going to count them as still being part of our, when they overstay their visas and their visas expire, Statistics Canada will count them as no longer being part of our population. But clearly they are. And they're actually in a much more precarious status. And so that's like my first order worry of why I have the growth in the NPR population. I'll just finish by saying this, the growth in the NPR population, what has worried me most about that, the first order problem, has actually not been the housing market for me or youth unemployment. It has been this population of overstayers that potentially what this will do is it will politicize immigration. It will pull it even more to the front pages of the newspapers. And as an immigrant who ultimately comes to this issue as someone who cares very deeply about the Canadian immigration system and values it very deeply, this really worries me.
Do you feel like any of this was like malintent? Like I guess how did it get so bad so quickly? You know, it was kind of like, you know, you said they chat with these guys in 2015, they had these targets. Okay, great, you got the targets, you're kind of scratching your head, but all of a sudden, you know, we go from what, 300,000 population growth to 1.2 1.3 million for a few, like it was unbelievable. And so I don't know how you could have missed it that badly.
Right.
I mean,
right. So I think the explanation is the following. I don't think there's any kind of malfeasant behavior on the part of government. I think they literally lost sight of what the hell was going on. And then you say, well, how the hell do you lose sight of this, right, within the immigration department? And I think it is, you get into a mindset, okay? And here's the mindset, guys. The mindset is that the economy will always benefit from more people being added to it, right? That's the mindset. The constraint on economic growth is just being able to attract enough people to Canada. It's like we can't get enough people. And so now you tell the colleges that the pathway, we're gonna change the rules on immigration so that a college graduate from a 2-year college program or even some private strip mall program is now we're gonna change the rules, which is what they did to provide a pathway to PR. That now is the carrot for these colleges to attract these international students and charge them very high fees. And the government's on board. We want more. We're trying to grow immigration. And so colleges jump on board and the growth is explosive. Conestoga is, you know, the exemplary kind of example of this, but there are many across the country. And they're, you know, it's a win-win. The government's winning on their immigration agenda. The colleges are doing better than they're balancing their budgets, much better. And who the hell wants to put brakes on this? Everybody's winning. Right? The government is just rubber stamping every study permit because why would you ever think about stopping this? This is a good thing. We're all doing well here. And so it just runs away on them. And again, I because I have conversations with people within IRCC, I know that the minister was told quite early on what was happening, that it was getting away on them. They were not going to be able to transition these people to permanent residency, that you had this bulging population of people with no status. That's going to lead to visa overstayers. They were told. But when you get in this track, this way of thinking that this is win-win, it's so easy to say, well, those are just kind of xenophobic people that don't like immigrants, right? That's the problem. We get away from the truth.
Well, so that's the thing I'd like to jump in there. I mean, that's that. First of all, anyone who said, like I was on this about 3 years ago, anyone who said, hey, by the way, this is probably not a good idea, was called, we were called literally racist in emails, which is bananas. My parents are both immigrants. Right. And the other thing is that we had a housing shortage, or not a housing shortage, but housing affordability was not good in 2016 and 17. Right. And you know, our dear leader came out and said that he was going to make housing affordability one of the pillars of his tenure in office, and to basically to goose, you know, basically an entire generation of renters, because that's what they are, right? According to the Bank of Canada, newcomers are generally renters, which is quite intuitive, but I mean, the Bank of Canada is a pretty good source. And so it's just fascinating to me that those two, like the left hand wasn't talking to the right hand. I mean, are we to expect sort of more of this? I mean, I don't know. I guess I'm the naive one in the crew, and I guess I'm just always baffled that these people don't talk to each other.
Yeah, so I think it's just, you know, a good example of it doesn't matter what part of the political spectrum it comes from. It's very easy for human beings to get caught up in a narrative. And when you have organizations, you know, I'll pick on the Century Initiative again, that are spending lots of money to try and move people towards some narrative, should always make us a little bit worried. And I'm not particularly partisan. I don't care what end. In this particular case, it's clearly came from more of the left-wing side of the political spectrum. But the right wing is entirely capable of this as well.
One last thing. That's the irony, of course, because Bernie Sanders in 2004 said open borders was a right-wing Koch brothers conspiracy. And so it's absolutely fascinating. Literally, I swear. He literally said that.
Yeah.
And it's fascinating to see now sort of a left-wing partisan group be like, we're going to flood the economy with cheap labor. And I just... Man,
Yeah.
Bernie Sanders. We should get him on the pod one day. That'd be anyway. Sorry,
But
I know
I
we're
think
wrapping
that
up
the
here.
emphasis is this is what I've dedicated my career to. I keep a disclosure statement on my website, and I encourage your readers to listen, or your listeners to look at that. But I take a lot of pride in it that I don't take money from and I get offered a lot. Lawyers have offered me, be on retainer. I refuse all money from anybody with any private interest. The only time I take money is basically from the Social Science and Humanities Research Council of Canada.
And Keith.
That's all the money I take. So
And
I
Keith,
think
get-
I
And
was
the
more-
and the economics class Christmas fund.
That's
at
right.
Waterloo.
No, I don't even go to that. So yeah, I mean, I think that there's a problem in academia too, that too much of it, here I'm going into another set of weeds, but too much of academia, especially in the social sciences, I think is caught up in pushing narratives and agendas. And has lost
No,
sight of
that's
the-
not. No,
Yeah,
come
it's
on,
not
that's
about
not,
truth.
that- we don't.
It's
Someone
not about
said it.
truth seeking anymore, right? And that's
What
I
do you
think what
mean? It's
we should be doing.
academia. They would never chase a narrative. for
Mikal, I know
money.
you. We know you got to get running, so I just want to kind of leave it as a final question here. But is there anything you would want to see? Like, if you let's assume for a day here that you're now Mark Miller. You're the Immigration Minister of Canada. We're in a huge mess here. We're trying to fix it. Was there anything in particular that you would do or recommend or?
So I see a big part of what's happened, and this was one of the questions we got in 2016, is what has happened very simply is Canada has seen a dismantling of its skilled immigration system. That is why Canadian immigration has worked historically, is that we have prioritized immigrants that are highly skilled. And so what immigration does then is it doesn't tend to increase inequality. It doesn't push down kind of the bottom end. If anything, it pushes down the top so that Canadians, especially lower income Canadians, don't look at immigrants as competition. They look at them as, hey, those are my professors and my scientists and my doctors. Why the hell would I be opposed to that? They make my life better. And that's the success. That's Canada's success. So what's happened is that whole system, if you know how it works, has been dismantled. That's not hyperbolic. That's what's happened. And so my first priority, if I had any kind of influence here, would be to bring that back. And that's not a pie in the sky recommendation. That's literally, let's go back to the way we used to do it, right? We have something called a comprehensive ranking system. I have thoughts about how to improve it. I think we can do it even better. In fact, a lot better than the way we used to do it. That was introduced by the previous government, by Jason Kenney, in 2014, and it's been dismantled. And I think it's a fantastic system because of the transparency. For economists, the most important thing in any market, and you guys will appreciate this, is information. People need good. If you want a market to be efficient, people have to have good information and make smart decisions. And right now, migrants who come to Canada don't have good information because the immigration system looks like a lottery. With this point system, they could go online, they could put in all their characteristics, and they would get a score. And they would know what the chances are of them being able to make this transition. It was transparent. There was no politicization of it. I would want to go back to that, Steve.
Yeah, I mean that's brilliant. I mean it's a great way to wrap it up. I think most Canadians would agree. We've got a lot of policymakers that tune into the show here, so hopefully your comments here haven't fallen on deaf ears, and we'll have to have you back on the show in a year or two to see how this all plays out, to see where
I'd like
things
to
are
do
shaping
that.
up. But keep up the good work. We love your work on Twitter there. We'll certainly link to it, and I want to thanks again.
Yeah, thanks a lot, guys. Have a great day.
Ever been abroad and needed Wi-Fi? Download Saily. Tired of telecom oligopolies ripping you off? Download Saily. Want to avoid sketchy SIM sellers at the airport? Download Saily. Saily might be the only travel app you need. It provides an internet connection wherever you travel and saves you money on roaming fees. It's easy to use, affordable, and reliable all over the world. Saily is the modern, seamless way to get connected without the need for physical SIM cards. With eSIM technology, you can instantly activate service from anywhere in the world. No more waiting in line for a local SIM or dealing with expensive roaming charges. Saily offers flexible plans that fit your needs, whether you're traveling for work or leisure. Plus, you can switch between networks in just a few taps, ensuring you always get the best coverage at the best rates. Whether you're a frequent traveler, an expat, or just someone who wants more flexibility with their phone, Saily's got you covered. No hidden fees, no contracts, just affordable, reliable data wherever you go. Visit Saily.com/Loonie Hour for 15% off.
Oh, that was a great interview. Just his enthusiasm. You can see that this is a guy that's incredibly passionate about what he does and the research. And he's been all over. I think what was most fascinating for me, I don't know about you guys, but just knowing that he's been kind of involved in this, that he was at the forefront back in 2015, 2016, when the Liberal Party came into power, and he was concerned from the get-go. I'm sure he probably didn't anticipate how wrong and badly it would go, but
you probably didn't realize this well back then, being an economist, at Waterloo, that at some point you become a social media rock star as well. The world has changed quite a bit. It really has. Yeah.
Yeah, a couple good economists on the show now.
Yeah, we are. We're building. Is that number 3 or 4? Come on down. Welcome.
Yeah,
send us an email if you want to join us.
We got a few more lined up. We're working on a special guest for the oil and gas sector, which we'll get into for next week, hopefully. But I think you got to talk about the elephant in the room here. U.S. elections.
I don't think it's the elephant. Isn't it the rhino?
No, it is the elephant.
No, the Democrats have the elephant, don't they? And the
No,
Republicans
the donkey.
Oh, the donkey. I get these things all mixed up.
No, the elephant. Anyways.
Yeah. So
anyway, something large is in the room, and it's the outcome of the U.S. elections. We do our best in the show to keep it pretty straight and narrow up the middle. But Rich.
What can you say? I think it was it was remarkable. I don't think anybody was really. There was obviously a 50-50 chance or 54 chance or whatever percent of Donald Trump winning, but I'm not sure anybody thought he was going to win the popular vote, the House, the Senate. And then what's really important is I think I saw this incredible chart on Twitter with every age group, every conceivable demographic, Latinos, gays, Jews, North, South, every age group, they all shifted to the right. And I think more than necessarily specifically Donald Trump, I think it was sort of a repudiation of a lot of the stuff that we've seen over the last few years. And I think it's fascinating. I say what you will, whether you like the result or not, those charts and that major lurch to the right is a fascinating financial market and political event. And I think we'll see what happens and how it affects Canada. In my view, I don't think it's going to affect Canada at all. But Keith, I'd be curious to know your views.
Yeah, it's kind of interesting in that, just the way the media is. I think people know, 85% of the mainstream media leans to the left. So there's always
in Canada. I don't think you're going to find any mainstream media that is even remotely on board with the outcome.
Yeah. So, no matter what happens, is always trying to, find something negative. So, so the immediate concerns with the Trump victory is this whole new tax policy or strategy is with duties. And, so, he even floated the idea once that maybe reducing income taxes, just ramp up duties. And by the way, for people who are not aware, what a duty means, if Canada sells lumber or wood to the U.S., then the Canadians have to pay a duty on that for it to go in to the U.S., right? That's basically the way it works. So it should make imports in the U.S. cheaper for Americans as opposed to the way it's currently set up. So a lot of people are very negative on that, and they have the reasons for it. Our view right now, we're pretty pragmatic with all of this stuff. So first of all, we don't know the outcome, if it's going to be awesome or not awesome, but we know it's going to happen. And typically, when you have duties as a tax policy increasing in one country, then other countries would do it as well. So on an aggregate level, this should act as a bit of a deterrent to growth, or it should cause global growth to grind lower. So we should see that. So the whole thing about nationalism, protecting your own local economy, that's what it is. And people are doing that now anyway, so that is happening. So the economy should grind a bit lower with this. But the other 2 points, one is more short term as well. We're going to see tax cuts in the US, so from both an individual perspective and corporate taxes as well. And again, it doesn't matter whether, one policy group agrees with it or disagrees with it. It's coming. It's going to happen. And that's going to be highly stimulative to the US domestic economy when it happens. And some people argue, well, it's just going to, pull future growth to the present day. It doesn't matter. It's going to happen. So the probability of the US economy growing a lot stronger over the next couple of years, or the short cycle than what was previously expected, it's now a lot higher. Like it really is. And if the growth is occurring in the US, then you have two things could happen. One, maybe it could pull the rest of the world out of it as well. Or what I think will happen is actually going to suck capital out of the rest of the world into the US. Because now you're going to pay less taxes. Apparently, there's going to be greater efficiencies with different policy, administrative fees, and you name it. To do anything, it's going to be reduced and taken away. So this is all very positive for the U.S. dollar. That's the way we see it. The other concept is more longer term. Go ahead, Steve.
No, I was just gonna say. I mean, to that point, Trump has been historically trying to talk the dollar down, right? I mean, I know some of that is for obvious reasons, but I mean, how do you sort of contend that those two views? I mean, I think it's logical to explain that, hey, listen, like I look at it as a Canadian, say, I mean, we just did an interview on productivity, right? I mean, now you've got the US cutting taxes, pro-business, deregulating. I mean, I don't see how Canada can remain very competitive.
We're not competitive. Don't worry. I mean, we're not competitive.
Exactly, but particularly under our current government. I mean, it's an anti-growth government that we have, really, at the end of the day.
I mean, agree.
It does make the U.S. more attractive from a foreign capital perspective.
Mm-hmm.
That's what it does. It also should encourage other governments, to get their act together. Canada, if you want to attract foreign investment here, then maybe focus on the biggest sector that we have, that is actual net exporter, which Rich is going to talk about. But you have to make it more attractive for people to want to invest in your country. And that's what's going to happen now in the US. And again, people may not like to hear that, or they like to hear it. It's irrelevant. That's going to happen. That will drive the dollar higher. Mm-hmm. The third point, which is the main point I think people need to appreciate, it doesn't matter if Trump won or if Harris won. This huge debt problem that the world has, that's not going away. So these policy moves, that's not going to affect it. So longer term, we are still going down a road where the world is likely going to hit this debt crisis. I think the current policy changes in the US, even though the debt in the US will ramp up, because they should, in theory, run bigger deficits initially, where it's going to suck more capital out of the rest of the world. In our view, it creates the probability that some other poor schmuck country out there, maybe in the G7, you don't want to be number one in this one, everyone. You don't want to be number one, but they're probably the country that will, experience this debt challenge first, because we can't solve a debt crisis without writing off some of the debt, and I don't see that as one of the solutions that's coming up right now. So again, short term, a lot of stimulus coming in the U.S. economy. It should be dollar friendly once we get going with it. But of course, none of that happens until January 20th. So we have some time to ride it out.
There's just one tiny thing I want to add. There's a whole adage that says when the US sneezes, Canada catches a cold. And I think what's also true, and although never really spoken about, is sort of the opposite, which is if the US does start to, if it's very stimulative for America and the US does grow, well, guess who's their largest trading partner? Guess who is our largest trading partner? Canada will, despite our very best efforts to the contrary, be swept up in that growth wave. And we will stand to benefit from literally our largest trading partner doing better, or at least growing stronger and having more stimulus and whatever, despite any capital outflow that is going there. I mean, we are their largest trading partner. So that is something I think people have to look forward to. And yeah, I think we did a pretty good job of tap dancing around that. But Steve,
but in the last 48 hours now, it's Thursday, so we have roughly a day and a half of markets trading. I mean, the dollar has been up 1.5, US dollars up about 1.5% yesterday, and now today it's down about 75 basis points. Canadian dollar did a huge round trip. Equities were to the moon yesterday. Today, they're up a bit as well. Gold is up and down. Don't judge yesterday's trading day and today's trading day as where we're going. It's going to take a little bit of noise here to figure things out. Because again, there's a lot of euphoria out there right now in the marketplace for it. And markets like predictability. They don't want to be surprised with something. And if the US goes through the next few weeks and there's no funny things happening, from any political side about the election, then yeah, market should really start to settle down and tell us what should happen in the first quarter of next year.
So I want to get your opinion on this because it's been sort of a theme of the show of the path of the journey that we're going on, and are we entering a recession? Are we not?
Aerosmith, you missed Aerosmith.
Yeah. So the soft, like again, regardless of one's political views, I mean, I think we have to all acknowledge that Trump is very pro-growth. This guy is I think he's going to get the economy going. He's going to get it fired up, and we're cutting rates. Financial markets are ripping right now. Are you of the view that maybe you don't really get that landing, and we just kind of accelerate from here in terms of?
Wait. So just before we get into that, Biden was not anti-growth. He was running an 8% budget deficit at full employment. So I think it's important to contextualize
right, and Trump's
that.
Budget deficit's probably not going to be much different at all.
Right, but so
I think his deficit could be even greater in the first few quarters.
I mean, no. So that'll be interesting. Well, then that's to me the rub.
Well,
right?
with tax cuts, if the tax cuts go through, it'll create. But that's more stimulus.
The idea that Biden was anti-growth. I mean, we had a revolution in capital investment over the last 4 years. People who don't like Biden may not want to admit that, but manufacturing, construction, infrastructure spending, IT spend. I mean, it's a remarkable increase of something we haven't seen in 30 or 40 years. But now we can talk about the differences between his policy and Trump's. I think it will be more stimulative, but I think in a different way, maybe. And maybe Keith can enlighten us on how that tax cuts will affect capital flows.
Keith, I'd be kind of curious to your thoughts here, because this doesn't strike me as a guy that's going to, go down quietly to let the economy sort of sink into a recession. I mean, I think he's going to do everything in his power to try to push things higher.
One thing I think people should be confident of is that they have a plan going into it, and it's going to be a very well thought out plan, how they're going to do it and how they're going to execute it. Whether it works or not, we don't know, but it's not going to be one of these, well, let's muddle around, pull this lever, put duct tape on that one. I mean, they have a very specific plan for a lot of different parts of the economy. And again, they're going to do it. So instead of agreeing with it or disagreeing with it, instead you have to say, okay, let's see how this all reacts. But let's not forget here, again, that problem is enormous. And if the American economy is able to actually become even more attractive than what it is now, as you just said, Rich, hey, over the last 4 years, A lot of capital flowing in. Like if you want to participate in the IT revolution and anything like, where are you going to go? You're going to go to the
America, yeah.
suburbs of Ottawa? No. You're going to go to Silicon Valley and elsewhere, right? So, we still have that. And when that happens, it could create this absolutely monstrosity of a bull market in the US. It really can. The negative side that could happen here, remember the whole global conflict narrative? That hasn't changed at all. Nothing there has been resolved, not in the last 48 hours. I think everyone knows, and I know it's from my network as well. This is probably priority number one with the Trump team now. How do you figure things out in the Middle East? How do you figure things out with Russia, Ukraine, and China, and Taiwan with the Philippines, and you name it? All that stuff can still go up in the middle of the night as well. And then that would derail the global economy, of course. So again, there's a lot of euphoria with financial markets. I think if everyone looked at their statements or the portfolios online the last 24, 48 hours, I think everyone made money in the world. It's pretty hard not to. But let's settle things down here in the next few weeks, and then we'll
Yeah, you think you feel it maybe is a little overextended?
Well, what were equities up yesterday? 4%? 3%?
Yeah, a lot.
Yeah. 3%.
And then small
so let's
caps
do Loonie
ripped,
hour math. Can you go up 3% a day for how many? Yeah, that doesn't work out. But you'd rather have the euphoria than having the opposite.
Yeah,
right?
Of course.
Yeah, absolutely. So again, like you got to be patient with this stuff. Don't react or overreact, and let's see where we go. But again, from an economic perspective, financial market perspective, the one market that looks like it could be absolutely horrible would be long-term, the long end of the bond market, right? Yeah, and the bond market, the long end of the curve is rallying big time today, like it's ripping higher. So it's almost back to where it was pre-open yesterday. But now there's a lot of debate, hey? Like, so if you get all this stimulus coming through, like what are central banks going to do? The Bank of England gave us a bit of a story this morning. So if the economy starts ripping again and there's lower taxes and deficits, what's going to happen with inflation?
Gonna go up.
Yeah, it's going to go up, baby. Yeah. So again, we're going to this potentially awkward monetary moment where a lot of countries outside, countries outside of the US, of course, including Canada, we might continue to need to cut rates to try to stimulate our local economy. Yet inflation is just ripping higher. And actually, it's really interesting comments came out from Rich's friend at the Bank of Canada,
Carolyn Rogers.
Yeah.
I missed it. What did she say?
So Keith, I mean, I've got it here, but basically she notes that I believe it's 60% of all mortgages will renew 2025.
Yeah.
So yeah, she just she's stoked some concerns. I mean, she their base case, of course, Keith will laugh at this, but is never a down scenario. They're always fairly optimistic.
I was talking about the other comment though that would get Rich even more excited. You're excited with the housing one, so I like that on the mortgage side.
What was the other comment?
So Roger said the Bank of Canada or Canada we have yet to hit the limits of policy divergence with the Federal Reserve.
Do you know what that means?
What does that mean?
Loonie's going way lower.
Yeah, but what does it mean? Explain to everyone, Rich, or see what it means.
Sorry.
Yeah, what does that mean in everyday language to everyone?
It means the interest rates are going to go in different directions, or one interest rate is going to
right,
or one is going. Yeah, the spread between the federal funds rate and the Canada's overnight target rate is gonna widen basically.
So do you think she was hinting that the Fed will start cutting rates a lot more than the Bank of Canada?
No, the opposite. The Canada is going to continue to cut rates, and if the U.S. does stimulate, and if as you say, if they do stimulate, whether it's through tax cuts or whatever, then the Fed will remain on hold, and then that will widen, and that interest rate differential will put more pressure on the Loonie.
Steve, how about in your world? Like with the election result, is this something that would directly, indirectly affect your world? Maybe just from a financing side or anything?
I mean, no, I mean, I just think like, people were just keeping an eye on the bond market, right? I mean, as we talked about the long end sort of moving higher, what does that mean for fixed rate mortgages in Canada? Because obviously, the Canadian bond market, gets dragged along with the US, right? So, um, I think we've cautioned on the show before, which is, people are like the average Canadian is so enthralled with the BOC and 50 basis point cuts, another 50 coming. No, assuming that mortgage rates across the curve are going to move lower, and so I think we continue to caution here that 4 is probably the new 2. So despite what the BOC does, I don't know how much control they have over the bond market there. So we'll see. And I think we've seen yields push higher over the last several weeks, and we'll see. I mean, we've had a good bounce in housing. We had housing data out. Vancouver home sales are up 34%, pretty much back in line with long-term averages. Huge jump in the GTA as well. So you're seeing it. The market is finally reacting to lower rates. Certainly not suggesting it's a bull market, but there's been a dramatic turn in housing activity over the last 4 weeks.
There's one more thing though, just on this 3 is the new 2 or 4 is the new 2 or whatever it is. I mean, in December of 2023, the BOC did a really important study. It's one of the boxes in the monetary policy report, which they now publish in a really shitty way. And I sent a very angry letter to the Bank of Canada. Anyways, they basically modeled out the future path of interest rates and then sort of figured out what the increase would be in mortgage payments for people with variable rate, variable payments, variable rate, fixed payments, fixed rate with a term of 5 years, etc. And you could see basically for all those categories, minus the variable rate, naturally, you're going to have an increase of mortgage payments from, let's say, $200 to $300, even $400 over the next 2 or 3 years. And this is under their own scenario where bond yields bottom out at 2.5. So even in a world where you do have this race to the zero, lower bond yields, lower interest rates, whatever, you still have a maybe 20% increase in your mortgage payments, or at least 15 or whatever. And so that's per month. But if you stack those times 12, et cetera, it's a non-trivial amount of money that people are going to have to pay on renewal. And I think we have yet to feel that really fully anyway.
Yeah, so it was Carolyn Rogers that noted this week. So more than 4 million mortgages, or about 60% of all outstanding mortgages, will renew over the next 2 years. Even with recent declines in rates, most will face significant increase in payments. So what she's basically saying is you have to think about all these people too, right? Where it's like, okay, maybe they didn't lock in at the ultimate lows of 1.5% back in 2021. But you have a lot of people that, in 2022 when rates started going up, they started taking, 3-year fixed rates and things of that nature, right? Where, you took a 3-year fixed at 3%. And so when you renew next year, you might be renewing at 4, right? So it's like you might not. So when you say 60%, it's not that 60% of mortgages haven't seen a payment increase. A lot of them actually have. It's just, again, there might not be any reprieve when a lot of these 3-year fixed rates that people were taking a couple of years ago start to roll over the next 12 to 18 months. So yeah.
So guys, tomorrow today's Thursday, which we record on, and tomorrow's Friday, which is today, right now. So the Bank of Canada, sorry, not the Bank of Canada, Canada is releasing their employment data tomorrow. So as you're watching this, we're speaking, it should be a pretty big day. With the data point, the Canadian dollar could be ripping in one direction or the other, depending on what's happening in the US. But the employment number tomorrow could go a long way to guiding us to what the Bank of Canada is going to do at the next meeting. Because right now, the expectations is that they're definitely doing 25, and it could be a 50, but the market is sort of in between right now. So the estimate for the jobs change tomorrow is 27,000 new jobs created. And within that number, it's minus 65,000 for part-time jobs, but 112,000 full-time jobs created. So we'll see what that number comes out with, and then that could affect mortgage rates coming up imminently.
Well, yeah, we've also got as you said, the U.S. Fed's today. So if you're listening to the show here on Friday, the Fed will have already made their move, Keith, and I think the market expectations are 25. Correct?
I love living in the future because you look back at the past. What?
Huh?
Yeah.
What?
What? It's going to be 25 today. That shouldn't be. And by the way, the Fed's meeting is always on a Wednesday, but because yesterday was the day after, the hangover day for everyone, and I'm sure I think Powell posted on LinkedIn that he's now available for opportunities. I think that's what he said.
Oh God! I was like actually took you seriously for a second.
Gary
Yeah.
Gensler
Yeah.
too. He's open for hire.
Oh God!
Head of the SEC, the anti-crypto guy. Did you see that
Oh yeah.
I'm going to talk about it because Bitcoin hit an all-time high, but Trump or the administration there has proposed building a Bitcoin reserve. I don't know if you guys noticed that, but
Cool.
we'll see if that actually comes to fruition or not. But little.
He's actually proposing as well to build a sovereign wealth fund for the U.S.
But they sort of have those already, to be fair. It's not so what I mean is like each state will have a sovereign, some kind of fund that they
Well, no, he's
invest
talking
in
about a
stuff.
federal. I
Oh,
mean,
okay,
at the state level, you can do whatever you want.
Okay.
And people don't realize, in Canada, we have, the Canada Pension Plan, of course, which is a combination of everything you can invest in, which is what you'd expect. The U.S. Social Security system, it just invests in treasuries.
I didn't know that. That's
Yep.
crazy.
That's
Why wouldn't
all.
they own the S&P 500?
They're not allowed. They tried to change it years back, and one side wanted to put managers in it they're friendly with you can just
Yeah.
imagine, right?
Yeah,
It's
it's true.
just horrible. But so on one hand, it always creates demand for treasuries, right? Because, there's a few trillion of them lying around out there. And but on the other hand, just imagine if the Americans did have a CPP kind of social security fund instead of what they have in treasuries. Boy, the economy or the balance sheet for the U.S. could be incredibly better than what it currently
Yeah.
is. So with the whole idea of sort of shifting savings and investment just a little bit. So think about it. Let's just say the Social Security Fund in the U.S. decided, you know what, we're going to invest 10% in the S&P 500, and even that will create a huge fight, right? Why the S&P? Why not something else? But the amount of additional demand on equities every single week or 2 weeks, it just pushes the market up, to the stratosphere. And then, people who still believe in valuation, they're not going to like it, but it doesn't matter. If there's more capital going in, it's going to push it higher. And Steve, to your point, if they do create some kind of a fund or something that's focused on the crypto world, digital assets, then of course it's excess demand going in, and it should push that higher too. So
Market's getting all hyped up.
can you believe Rich just learned something he didn't know? Rich, why don't you share with us next, if it's okay, Steve? I know you've been working on. We talk about the energy market next in Canada, the policy announcement.
I'll frame it up for you, Rich.
Go for it.
So I don't know. It's just funny, right? Because we're talking about this, and we're talking about the orange man that just got elected. That's gonna deregulate and attempt to re-stimulate and cut taxes, and Canada is going to be doing the exact opposite. So the Liberal government announced that they want Canada's highest polluting sector to cut emissions, the oil and gas sector, by 137 million metric tons, or 37% below 2022 levels. And they want this to be done by 2030. So they brought in a pollution cap, essentially, or they're calling it a cap on emissions. And so Alberta's responded, of course, not happy. And their estimate is that the oil producing province of Alberta says the proposals are in effect a production cap. that will drive up prices and cost up to 150,000 jobs, and they'll cut GDP by up to $1 trillion. So $1 trillion of GDP could be shed in order to basically reduce emissions, because they believe that the emissions cap is in effect a cap on production. So I'm sure the truth lies somewhere in the middle of both of those statements, but Rich, I'll pass the mic over to you.
Sure. I mean, I think what's important to realize is that you can have a situation, to give Stephen Guilbeault, friend of the show, some credit. You can have a situation where your emissions stay flat and your production does rise. And that's been true since 2000 and let's say 12, where emissions are basically the exact same as where they are now in megatons of carbon dioxide equivalent. And since 2012, we've increased our crude oil production by 2 million barrels of oil per day. But we know that guy's so full of shit, because this is a ongoing campaign to end, neuter, curtail, cut, and destroy Canada's oil sector. There's Bill C-59, which tells you that you're not allowed to say that natural gas is better than coal. There was the lengthening the impact assessment, which is just delays and denies new projects and pipelines. They've banned pipelines, not the transatlantic notwithstanding. They want to put methane's regulations, carbon pricing. There's a cap and listen, at every single turn, this government has made it clear they hate oil and gas. They want to fight climate change, even though Canada's 1.6% of total global emissions. So, to me, it's total BS, basically, and a 5-year-old could see through this. As a result, CapEx in Canada in the energy sector is at a 30-year low when adjusted for inflation. And so I think Danielle Smith, who we would love to have on the show, so if you're listening, please come on down, is rightly pissed off. And I think she sees through this guy. I mean, it's very, very clear. I think what's important to note, and people who have listened to us for a long time will know, is that without oil, Canada's largest export, Canada would be totally screwed. And it's a function of two things. One, we get literally like $46 or $50 billion in taxes and royalties, which is the equivalent of, 20 hospitals, Keith, the 20 Halifax hospitals. I think we did the math. These enormous amounts of money. Alberta then not only is that, but is effectively they basically pay for all the transfer payments that go from west to east. Thank you very much for that. I'm not sure we deserve it, but nevertheless. And then crucially, it basically props up our currency via the current account balance. We sell 97% of our oil to America. They give us hard currency in return. We use that hard currency to import products and services from all over the world. And if it wasn't for the 4.6% of GDP that is constantly flowing towards us, doesn't sound like a lot of money, but it is a massive number, the Canadian dollar would be even more in the toilet than it already is, given our shitty productivity growth, high debts, on and on and on. And so this guy is committing, I don't know, what is it, what the Japanese do? Like a ritual, like harikari? I mean, he's doing an act of self-harm on the Canadian economy that is grotesque, and it's an ideological driven attack on working class people from coast to coast. This is not just about Alberta. Those 150 jobs, with all due respect, are a total red herring. This is about current account balances, the currency, inflation, royalties, taxes, etc. And what this man is doing is absurd. And by the way, will have zero impact on global emissions. So there's my rant for today.
That was a
Keith?
good one. Yeah. I don't know how to add to that.
Sorry.
I think though, just to reiterate what Rich was sharing, and I know you did some good work on this a while ago as well, Rich, for people to understand that when Canada, our net exports, so what do we sell to people? Is energy products. That's it. So that gives
and other
us
natural
US
resources.
Yeah, other natural resources, absolutely. And that's US dollars coming back in. And then our net imports, we have to pay for that. So while we importing from other places, your computers and boots and whatever you're buying and things like that, without the energy exports, the Canadian dollar would be significantly weaker because we wouldn't have the USD available to buy this other stuff. And people don't understand that. They're making these policy decisions. Or they'll say, yeah, of course we understand that, but we have a higher level of responsibility to the world and stuff like that. That's what we're hearing. And this policy is my understanding that has not been passed yet, I don't think, but it was presented to Alberta, and it was clearly not well received. They were like shocked, really, that, are you kidding? This is what you came up with? But if it does go through, maybe it would be reversed with a new government if we should have one coming up. But clearly everyone should realize and appreciate, from an economic perspective, this is not good. This is a very negative policy move for the country.
We have so much going for us.
Sorry. Just a couple more things, just a couple more things, and I'll pass it on Tuesday. But just like, what people just don't understand is Canada is a petro state. It is our largest single export, by far the largest contributor to our trade balance in net terms, which is the only thing that matters. It is an enormous source of wealth. And this government is not interested in my view, very partisan, but is not interested in making Canada wealthier. Because if they were, they would get out of the way of this industry, which, by the way, is already one of the most efficient. I just explained to you how emissions have been flat, and we've doubled our output. And I just think the other thing that I think is really important, and Steve, if I can give myself a little plug here, and you guys can, you guys, please, if you're interested in more of this, or maybe a different, less animated and less passionate version of this explanation, please check out my latest IceCap Canadian market wrap, where I sort of go over this and show all the charts. But the reality is we're also on YouTube, on YouTube, yeah. But the reality is that oil demand is going up, not down. The world burns 102 million barrels of oil per day. And if Canada just stops producing that oil, which is, in my view, the explicit policy aim of Stephen Guilbeault, that market share will simply be picked up by, let's say, the following countries: China, Russia, that's second place, and Saudi. Let's do it the other way around. So US is the first. They produce 13 million barrels of oil. Then it's Russia, and that's Saudi. And then China is after Canada with about 4. China has an oil deficit, so they won't export it. So that leaves Russia, which we're not exactly super friends with, and Saudi Arabia, which doesn't have the best human rights record in the world. And so this mentality that if we just do our part and stop oil exports, that somehow it will have some magical impact on global markets is childish at best, absurd, and should be derided. This man should be shunted to some backwater AHL team. It's insane. We are ceding market share to people who explicitly have, in my view, horrible human rights records, horrible governments, blah, 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 for nothing. And I just think it's important.
You're picking on the AHL now? That's not fair. But anyway, I think that's
my rant for today. I'm sorry.
Steve, I think with one more topic we want to go today with Germany. I think it was people may not have realized what happened in Germany yesterday because of all the noise coming out of the US. But this is something Rich has been following very closely as well. Do you and I want to screw it up, Steve, or let Rich continue as he's on a roll?
Go ahead, Rich.
I promise to be less passionate about this. So Germany's governing coalition has collapsed, and this is, for other countries, there's a coalition every other weekend, it seems like, and there's snap elections all the time. The UK just went one after one, and blah blah blah. But for Germany, this is a big deal. And so Germany, so Christian Lindner, he was the finance minister from the Free Democratic Party, which is a right-leaning party, was in a coalition with Christoph Scholz, I think is his name, of the Social Democratic Party. And Scholz basically unceremoniously, in a very rude, by German standards, way, kicked him out. And effectively, he's now calling for a confidence vote, and there will be a snap election, and which is rare. The last time I think it happened in 2004, whatever it was, or 3 or 5, whatever. And this is a big deal because this is basically in a reaction to not a collapsing economy, but we've talked about this before, a industrial sector, which is hyper important to the German, not only ethos and sort of their view of themselves, but their economy. They have record high energy prices as a function of doing all kinds of stupidness around nuclear power, but also there's real strife for that. Unemployment is rising. It's actually higher than Italy, believe it or not, Keith. And so you have effectively a country in a recession, and there's one party that wants to sort of deregulate and cut taxes and sort of get out of the way, and there's another party that wants to spend, and and it's a real interesting fight, and it's really a function of an economy that's really under a lot of pressure, both from China, from their own stupid energy policies, and then obviously internally because of immigration, and it's a really super interesting thing to just keep an eye on, especially because Germany's 25% of the euro area GDP, and it'll have impacts on policy and growth and whatever. And just something I thought was really interesting to talk about.
So in classic European and German style, a snap election, if you can hear it.
We got it that time.
Hey, cool. A snap election from a European perspective. It is currently early November, will take place in March of 25.
I mean, I think it's like they said January, but who knows?
It is. Yeah, it's pretty interesting. But go back to the earlier conversation. So now if you're thinking about, hey, investing billions of dollars in a company or some place to set up shop, are you going to Germany? Are you going to the UK, Canada? No, you're going to America now. That's the place to wrap
Thanks,
it up,
Joe
Steve.
Biden.
Yeah, no, I mean, huge week with all that. So it'll be interesting, Keith. I think financial markets are reaching a pretty interesting point here, and we'll see how things all shape out. I think there's tons to keep an eye on and look forward to, and yeah, it's gonna be it's good. Keeps the Loonie Hour entertaining. Nothing worse than a slow week.
That's what we do. We are here to entertain you.
That's right.
Well, that's a good place to wrap this up. As always, guys, we appreciate you guys tuning in. Appreciate the support. If you get any sort of value or entertainment out of the show, share it with one friend, one family member. It's really just how we build the Loonie Hour community, 1-to-1. So, as always, appreciate the support. See you next week.